What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the SoFi stock. We are also going to be covering the overall market. And believe it or not, I actually have some great news for you guys today. The digital shift from legacy banking to fintechs is accelerating. The stock prices on these fintech and growth companies are not showing what's actually happening behind the scenes. But I'm going to be bringing you guys the actual data so you know exactly what's happening, so you can have more confidence to buy up these dip buying opportunities and the stock market correction we're having with the technology sector, specifically the Nasdaq. And if you feel any of this information is useful, be sure to subscribe to the channel. Let's try and get the channel past 10,000 subscribers. Be sure to smash the like button and be sure to drop a comment. Are you loading up on SoFi stock this week? Are you buying up any other stocks? I want to hear. Drop a comment. Let's get into the video. All right, guys, let's keep it very simple. I'm filming this video right around noon today, so there could definitely be some changes in the Nasdaq. But as we can see, we were pre-market red, early morning pump, sell, non-stop insane volatility. Okay, we're still around an 8 to 9% correction. If you look at the 6-month chart, the Nasdaq is up 1%. So people playing it safe in these indexes, they've received basically no gains if they entered at the lows 6 months ago. No gains at all made inside of the Nasdaq, but there's been about a 9% correction, I believe, and we did hit a 10% correction on Monday. So nonstop volatility. This could hit, a 15% correction if things, get absolutely worse and worse. Inflation just skyrockets to 10%. The Nasdaq could correct, 15%. Nobody can time the market. But I think there's some great dip buying opportunities inside of the tech sector right now. So if you look at the 1-month chart right here on, JP Morgan and other bank stocks, since the beginning of the year, they've just been going up and up and up off of no results, no earnings, just going up because they say rising rates is going to help the banks do better. But guys, when those numbers actually came out today for JP Morgan, our biggest competitor, they are down 5%, guys. The stock absolutely tanked on earnings. Why? What is going on with these banks? I'm going to show you exactly what's happening that the media is not really putting out there right now. JP Morgan shares fall 5% after CFO lowers guidance on headwinds, including wage inflation. So, guys, I'm seeing, the CEO, CFO blaming, headwinds, but in reality, I think they are getting hammered by these fintechs, and their customer and user growth is absolutely slowing down dramatically. You have to scroll down extremely far to get the real details. You got to really scroll down in this article to find the details of the financials because they are really hiding them. While company-wide revenue rose 1% in the fourth quarter. 1% growth for JP Morgan. Guys, this is, 2021 Q4 numbers. This isn't even the March, 2020 and, the entire 2020 numbers for, COVID and stuff. This is after like a year and a half of recovery. They're at 1% revenue growth right now. These stocks were rallying at the beginning of the year, rallying while fintech is plummeting. Remember, guys, you're getting what you're paying for. You're paying for value. This is what you're getting in value. You're getting no growth. If you want to buy the high growth, you have to pay more. That's what these CNBC analysts don't know. Every single one of them, 9 out of 10, are 40 to 70 years old. They don't know what's going on in the fintech market, okay? They don't understand multiples, okay? They think these values are good buy. Guys, 1%, that's what you're getting. Why would you buy these bank stocks right now? These just rallied 15% the past 3 to 4 weeks. There's no growth. This is a earnings with, a brand new year, 2021 Q4. This isn't March 2020 or the entire 2020, guys. You have to understand legacy is falling off a cliff right now. They had 100 years. They have peaked, guys. It's been like this 10, 20, 30, 40, 50, 80, 100 years. It is peaking now because innovation, technology, fintechs are just disrupting these markets extremely fast, stealing market share. SoFi right now is down right around 1%. I guess they're, correlating to the banking sector now. We didn't follow the banking sector when they were going up, but of course we're following the banking sector when it's going down. But I think you should continue to load until those earnings come out, guys. We have two major catalysts on the way. And those catalysts, of course, are Super Bowl February 13th. This is just going to get the name of SoFi out there to give us a better Q1, earnings, also a better growth in users. And then we also have February 9th, estimated time frame on the earnings date. So these are, catalysts right around 3 to 4 weeks away. Two major catalysts. So I would continue to load up on SoFi at these levels because these could be the all-time low levels that SoFi may ever see, because these earnings could get us out of this, downtrend that we are taking over the banks officially. I mean, this is going to be our third earnings as a public company, and the last earnings was a double beat with a guidance raise. So you're getting what you pay for with growth, okay? You have to pay more. There's nothing in value with these banks right now. There's no growth at all, and you just saw the data. So why would you buy JP Morgan at 1% revenue growth right now? It just doesn't make sense. Guys, this is a $2 trillion opportunity. And as you can see right here, JP Morgan is second on the list. Of course, their market cap, got way higher since SoFi put this investor presentation out. And of course, Visa, their growth is actually going down as well. I mean, they're trading at like 15 to 20 times sales. That's value trading double of SoFi right now. It's absolutely incredible what these, older investors are willing to pay for these legacy companies. The valuations don't make sense to the growth at all. If you read over the investor presentation on Q3 and you just scroll down, to page 3, SoFi is hitting an inflection point in every metric, guys. Take a look. Here are just a few examples of our success. In September, we launched our SoFi Money Moves brand campaign during the US Open tennis tournament at the start of the NFL regular season. The impact has been immediate and dramatic. SoFi TV spots drove more than 500 million impressions during the biggest moment in fall sports, and our unaided brand awareness doubled to a new high during launch week. By working with some of the biggest digital influencers across social media, we've driven an additional 400 million impressions and 775,000 engagements with SoFi content, guys. The TikTok brand awareness, 8 billion views. Nationally televised NFL games, SoFi Stadium getting 20 million viewers per game. This compares to 15 million total TV viewers the entire year last year. So guys, this NFL Stadium up in full force is working. Remember, their last earnings report, 1 month, guys, of NFL marketing. This current earnings report, we're about to get 3 months of NFL marketing, a full campaign of the NFL Stadium and these nationally televised games. I'm telling you right now, if our numbers get over that 400,000 users added to the platform, I'm telling you right now, this stock could rally into the back end of 2022 because growth is accelerating right now, guys. Accelerating. JP Morgan, 1% growth. We're expecting anywhere from 50 to 60% growth this next quarter. And I want you to take a look at what some of these other, technology stocks that are much more overvalued than SoFi, what the insiders have been doing the past couple of months, okay? We do have insider trading activity for Palantir. It's just been nonstop selling the entire year because their stock got up to $40, guys. Take a look at Snapchat, non-stop insider selling. Look at all this selling. This has been going on the entire year. Snap was trading at like 40x sales around $90. Cloudflare, incredible insider activity selling at the peaks, the lows. This stock was valued at 120 times sales at one point. If you take a look at SoFi Technologies insider trading activity, $1.5 billion has been bought in the last 3 months, guys. Every time this stock seems to get into the $13 range, they love buying up these dip opportunities, guys. Look at the insider buying. The corporate insiders are buying, okay? This is incredible, okay? There was a lot of money behind SoFi, and they are holding up their stock extremely well, and they believe that these levels are incredible times to be buying. Remember, SoFi stock didn't rally like Cloudflare, Snapchat, or Palantir. We've just been, cruising around $20, $25, the entire year. And now we're at all-time lows. So, guys, insiders are buying at these levels. Our biggest competitor is decelerating in growth, 1% revenue growth. And we are seeing inflection points with our NFL marketing. Okay, we have a great product. We have Galileo, exploding to 80 million accounts. We have revenue growth expecting to be 50 to 60%. This is all happening right now. These stock prices aren't correlating to what's happening with fintech versus banking. There's a lot of shorting making SoFi look like a bad company right now, but in reality, these stocks are not correlating to what is happening. And if you watched my video, a couple of days ago, I said specifically on this video right here, February 1st, I said that is when, the technology stocks are really going to be kicking in with these earnings. And I believe some of these, hedge fund managers will be buying up, these technology stocks that are down 50 to 80%. We had JP Morgan and Citi kick off the bank earnings this week, January 14th. But I think it's a good time to be buying because, we just got CPI data, knocked down stocks, growth stocks came down even more. But, the technology sector really begins February 1st. So what I've been telling people to do the past, 3 to 4 months is just buy once a week or once every 2 weeks on a Friday, okay? If you don't have a lot of cash, buy every 2 weeks. Don't try to time the market. Just buy every 2 weeks. If we continue to chop around, remember guys, the Nasdaq has been chopping around going on, 60 days, 2 months. November 19th is when we peaked. We had about a 10% correction. So we may be entering the third month of a correction in the Nasdaq. Just buy every 2 weeks. That gives you 2 buying opportunities on the third month of the correction. So once again, nobody can time the market. The Nasdaq may dip to 15%. It may bounce back. Nobody can time the market, but all I know is value has no growth right now, as we can see with the banks, our biggest competitors. And I'm really surprised SoFi stock is not going green because we're about to see accelerating growth. I'm just hoping for these earnings to get announced. The sooner the better, because I think we're going to hit some amazing numbers, guys, especially with the user growth to just show, people are leaving, these legacy banks faster and faster. If you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing this video for you. Once again, the tech sector has been absolutely demolished, anywhere from 50 to 80% losses on anywhere from 100 to 200 companies. Small caps, I don't even look into those. Anything under $1 billion market cap is, probably down 80 to 90%. SoFi is a real company expected to hit profitability potentially in one of these next quarters, a profitable quarter, and a full year, profitability potentially in 2023. So things are looking very bright for SoFi. It looks like their losses are going down, their revenue is going up, their users are going up. Everything is accelerating. They're hitting inflection points because we have an amazing marketing team that is getting this product out to the people faster and faster, and people are loving the product. Once again, I believe the legacy accounts, the Visas, the MasterCards, the JP Morgan Cities, I think they're going to continue to see decelerating growth. And I think Fintech will continue to accelerate the next couple of years. These are the buying opportunities. SoFi has been a public company for over a year, and it's at all-time lows, and the numbers are accelerating. So the stock prices are not correlating to what the businesses are actually doing. You have dozens and dozens of these old CNBC analysts coming on here, pumping legacy, pumping stuff with no growth at all, talking about valuations. You have to pay higher premium for growth, and that's just the truth, because these are going to be the companies that continue to disrupt, the legacy markets, just like we're seeing in companies like Netflix that disrupt the cable industry, and just like Tesla that disrupted, the gasoline industry. So banking is one that is going to be tough to bring down, but I'm telling you right now, it will happen with time, because even though the banks are shorting, you're going to have hedge fund managers, that aren't banks, that are actually just, investors that are going to be going after those companies disrupting these banks. So even though they're shorting the crap out of us, they are losing the race, and we are going to see accelerating growth into the future. Once again, my name is Kyle. I hope you have a great day.